Dear trading friends, once again an update video on Bitcoin. We won't just be looking at Bitcoin, but also at the S&P 500 a bit, and if there's still time, some altcoins as well. But it couldn't be more exciting. I've prepared a little something. On Friday, as you might remember, there was some really good news released. The Strait of Hormuz is open, and it looks like a ceasefire agreement might be reached. The market pumped, Bitcoin shot up nearly 7%. The S&P 500 climbed another 2% and reached a new all-time high. So it's really incredible what has happened here. These were also the updates I shared with you here. On Saturday, I gave you the update video that the Strait of Hormuz was closed again because the US was right there afterwards and stopped all ships. Iran said that's not going to happen and they won't allow it. And yesterday there was more news with Donald Trump freaking out again. Apparently there was some violation of the ceasefire by the Iranians, if I saw that correctly. And if Iran doesn't accept this offer, which the US also proposed, he wrote that there will be no more nice guy. So they would wipe out every power plant, every bridge in Iran. They would completely destroy them. Once again, bad news. The market has now opened. The US markets aren't open yet. We now have several gaps, CME gaps. You can see it here. In the S&P 500, there's still a gap that's currently open in this area. But what's really interesting, take a look at this, guys. We now have 4 CME gaps in Bitcoin. I can't remember the last time I saw that because up here all the way to just under 84,000 US dollars, we still have one. That one starts at around 79,000 US dollars. We now have an open one that happened over the weekend. And we also have 2 more below us between 70,000 and 69,500, and even further down a small one from 67,745 down to about 67,000. So the CME gap landscape here is really more than just glowing. At the same time, we're seeing something similar with Ethereum. Ethereum had its CME gap, which was still open in that area before. We've already dipped into the first part of it, but got rejected here. This means that there is still quite a bit left in this gap. The prices would go up to around 2,660 US dollars. But if we do rise that far, I would actually see this as a valid and interesting level, because this is where we had the last consolidation before a massive sell-off occurred. That's all for now regarding the CME gaps. It remains extremely exciting because with Ethereum, the gap is now just above us and we've more or less already entered it, with another one above us and only a small one below us. But with Bitcoin as well, we have to be honest and say that we're not far away from the gap above us, and that could actually lead to a pump. With the current negative news, I wouldn't be quite so optimistic unless there's another agreement. But remember, last week we had something similar. There was good news, then bad news again over the weekend, and the market was sold off. Then we saw another good increase. Again on Friday there was good news, then bad news over the weekend, and once more there was a sell-off. And now this week remains very exciting to see how things will continue. If we look at this in the chart analysis before we move on to the liquidation heat map on lower and higher timeframes, but also to the level 2 data, because there's a lot of interesting stuff to see there as well, especially the funding rate, which is more than negative for quite some time now. At the moment we are calming it down a bit again. Despite everything, it is still negative. This means we currently have an incredible number of short positions open. I'll show you that as well. This can lead to a very strong short squeeze, which in turn could result in the first liquidation here at around 78,655. Not only that in this area, but if we go in here and I turn this off again, we would be just like we had last week. We had exactly this liquidation area in this region. But if we rise again this week and actually trigger this liquidation at 78,000 US dollars as I showed here, then this could once again lead to the bear flag top here and we would test it again. Which one do I mean exactly? It's exactly this area. By now you already know this anyway. Exactly this resistance line. And that would be interesting again if we really take advantage of the whole short squeeze due to the negative funding rates, because we're entering here once more. I need to make this a bit bigger. Here we see open long and short positions. At the current moment, they are negative, which of course also matches the funding rates, since we're below 1. We're at 0.78. But what we also see here is that we're now just barely below again when it comes to open accounts and their positions. Of course, we can't just include this exactly as we have it with the open positions. And at the moment, there are more open short positions than long ones, which could lead to a short squeeze. That's why I'm currently targeting 78,655 or a bit below that, where we already have a new grid trading bot in the signal group. And if we look at it now, basically not much has changed if I take my previous chart again. You still know this from the previous videos, the Saturday video. If you haven't seen it, I can only recommend that you check it out. We are still in this upward trend. So I'm also not ready yet to really enter a short position here. If we reach up here, maybe get into the area again where the liquidation is also located, then at this point in time it would be very interesting because of the short squeeze due to the new liquidity, and at the same time this liquidation is just above our CME gap. And that's why it would still be interesting. But I'm still expecting a correction. I'm just telling you how it is. If at this point the high is not surpassed again, then we still have exactly from this area, from this breakout, if we now take it up, a possible correction level at the 0.618, maybe even a bit lower, depending on where the retest will take place. But at the current moment, we're looking at around 70,000 US dollars. If we now switch to 2 weeks in Model 3 on the Coinglass liquidation heat map, we have this large cluster here. And on the 2-week view, this looks really interesting, even though on smaller time frames, like in this case, the 3-day and 1-week charts, we do have a bit above us, which for me is now very exciting to potentially use for a short position. But looking at it on a weekly basis, this whole pump that we had, the 70,000, is super interesting. Nothing else would really happen except that if it actually plays out like this, we would very likely build up even more liquidity. Maybe we'll even go down a bit further. We would still have the possibility of a retest from this major downtrend, the all-time highs that we have in there, and we would continue to be in a bullish structure. We really started to build it up here in the daily chart, and if we include that, we've made a new high again. We could actually continue here in this area and maybe even reach the range of around 85,000 or so. Where do we have the CME gap, the bigger one above? 83,400. So that would be roughly here in this area, where the CME gap would also be closed. Maybe we'll actually see such an upswing and a continuation of the bullish price structure. And then the question would be, is this just the small retest as I mentioned last time? In the previous bear market, if we look at the daily chart now, we had something very, very similar. And will we then see the bigger leg down afterwards? Let me just show this very briefly so you can see what I mean. After this breakout here in the last bear market, there was the first retest, which would of course be very, very similar now. We could have a similar pattern so that we get a retest around the previous lows, a nice rise, and then the possible final leg down, which I would be waiting for because then we would finally have this divergence just as we had here as well. That we simply had a rising RSI in this area with a falling price so that we might then find the bear market bottom, because that still hasn't been achieved yet. But for me, the current rise, the first good signs, if I look at it here, the rise, especially on the weekly chart, is of course very, very interesting to me. The current weekly chart rise in the RSI would now be a very good sign that we are recovering, maybe with one last leg down, no matter where that goes, even if it doesn't reach my price zones where I still expect it to. Around 58 to 55,000, maybe even a bit lower. But if that does happen and we really do see one last bigger leg down, then we would also have the possibility of this potential bullish divergence, which I have been hinting at for quite some time now, and which I also hope will happen, and it could look something like this. The price would then make a strong leg down here, but the RSI wouldn't quite follow along, and somewhere here we would form this bullish divergence. Then we would actually have the same pattern as in the past, where we drove people into a bullish market again, quickly sold off once more, and thus created this larger divergence on the weekly chart. In that case, I would actually be very, very bullish. At the moment I am. Guys, I don't know how you see it. Leave another comment below. We are in a war situation. We are very, very uncertain when it comes to the global market. So nothing is really going well, and yet despite everything, we are currently rising. Which, to be honest, is a bit strange to see, I have to say. Accordingly, this is my current setup. If we rise, I am prepared for the short. If we fall, I would enter the next long positions as well as long grid trading bots in that area. The current status of the grid trading bots, well, pretty much everything is in profit, I have to say. Really, everything is in profit except for the S&P 500. That one still worries me a bit. Very briefly, to wrap up here as well, S&P 500. If we go in here, my plan was actually that if we get a rejection at this ascending trend, then that would of course be very, very interesting. Now, at the current moment, if I go in here, let me turn this off, we actually broke through to the upside at last week's Friday close. At the moment, we're struggling a bit on the 4-hour chart. You can see it very clearly with this descending trend. Despite everything, we still have the CME gap there. If we zoom out a bit now regarding the S&P 500, so now I have the daily chart here. We really have an incredible number of green candles here. Just take a look at this, S&P 500. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 green candles. And if we include this one here, just a small one. That's almost record-breaking. Such a massive increase without any real correction. And if we now look at the RSI, we can see that with this upward trend, at least for now, this bearish divergence is still playing out. But despite all that, I am still very, very cautious when it comes to the S&P 500 because it's just pumping massively, even on the weekly chart if we look further into it. That would be the case if things actually play out like this, and we are again, I want to emphasize, we are really not in a good situation globally, and yet the S&P 500 just keeps pumping and has now reached a new all-time high. And I don't know, I usually don't trade very much, I've only recently started trading the S&P 500 as well, but when I see something like this, exactly this upward trend in the weekly chart, and the RSI just isn't following along. Can you remember with Bitcoin how we saw this over such a long period? And the RSI, the price went up, but the RSI went down. Are we actually going to see an even bigger and more severe crash? I'm really curious about that, because here with the S&P 500, I can now adjust my target level a bit up to 6,000 US dollars as a possible first target level for my short position. But that's exactly what makes it so exciting. When the RSI is rising like this but doesn't make higher highs, it means we're building up a massive divergence here. A truly huge divergence which, if it plays out, could of course trigger a massive crash. What I mean by that, if we take another look here, just look at the kind of divergence we've gradually built up over a very long period, with Bitcoin as well since 2024. Take a look at this. On the weekly chart, there was exactly this kind of divergence. The question now is, how long will this play out in the S&P 500? Because here we see this comparison. March 2024 as well, and it was the same with Bitcoin. That was around March 20th, 2024. Only by now, Bitcoin has entered a bear market, while the S&P 500 only had a small correction here and immediately started rising again. If the S&P 500, but also the Nasdaq, which of course has also risen massively, if something similar happens here, so that the RSI keeps falling while the price is still rising at this point, and a bigger crash should occur, then we can imagine what could still happen to Bitcoin in terms of a sell-off. That's it for this video. I'm interested in your opinion. Do you see a massive pump here, or are we actually about to experience a real sell-off soon because the bigger players like the S&P 500 and Nasdaq will push us down to lower prices? See you next time.